From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 23rd, 2018. Today we're going to take a look at the USDCAD, the US dollar versus the Canadian dollar for today's trade analysis. Overall, here on the daily time frame, we can see this currency pair has been in an uptrend for quite some time. We go all the way back down here into April of this year, where we started into the 1.2550-40 level, down at the bottom of the blue and the black trend line. Started that rise. We've had periods of congestion, consolidation, all the way up, but it has continued to pressure to the highest highs into the upper 1.33s. Recent weeks, we have seen a pullback all the way back down into the mid 1.3 thousands, a little bit of a rebound, and then late last week, a sell-off of the US dollar, sending the currency pair once again back underneath the 1.314565 level. That's the blue shaded area that you see right around the current market price. Just a little bit of history here. If we go underneath that blue zone to the left-hand side of the chart, the black circle shows resistance clearly at the yellow shaded area. That's 1.309565. So we clearly know that there is a decision zone right at the yellow zone where the market previously has found resistance and reversal back into that level. So as long as it's had historical price action around that level, we know that there's potential future price action around that level as well. So the yellow zone is very important for us to remember. Let's go ahead and zoom it in one time here on the daily. Also, some fact, it's a statistical fact. This is anything that we can change about the current market. And I'm just going to try and get this circle drawn out here. Oh, didn't mean to move that. Let's see if there we go. The fact is, the last time the market was above the blue shaded area, 1.314565, and it got underneath it, the market did exactly what you would expect. It went to the yellow zone, 1.309565. So with that, we have this expectation. You know, you and I, who don't really have any control over this currency market, we just have control when we get in and when we get out. But all we can do is take information that we can gather, whether it's fundamental analysis, news, whether it's technical analysis using trend lines or some sort of oscillator or indicator. We gather information that gives us higher confidence in our trading decision. Well, this is one of those things that we can look at. Is the fact is, the last time the market broke the blue shaded area, what was support, then it became resistance, it went to the yellow zone. So that's a fact, and that's something that smaller investors can take and use to their advantage. The fact is, under the blue zone, we expect it to go to the yellow zone. Not because it has to do that, but that's what it did the last time. We also see the fact is the market is now underneath the longer term black trend line. We see the black trend line coming up from the bottom. Today we've opened underneath that black trend line. There's no guarantee it will stay under there. It could be a false breakout and turn around and go back in the other direction. That's the risk of trading. But at least right now we're under the black trend line, under the blue zone. Historically, what that means to us is that we would have higher confidence that it's going to continue to go lower. And the only thing that's going to change that right now is that it gets back above the blue zone and the black trend line. Zoom it in one more time. So with that, we can make some assumptions. Underneath here, we look for resistance. Only above it do we look for a change in direction again. We also know with fact that we expect it at least to go to the yellow zone, if not lower, if the trend changes and it goes down. And the risk is, again, that it gets back above the blue zone. So that gives us an opportunity today to look for a short or sell underneath 1.314565. An interesting side note here, Forex Black Book, the trend bar that you see at the very bottom of my chart, has turned from green to red today. So what that gives us higher confidence in is that maybe the momentum is shifting from bullish to bearish once again here for the USCAD. So that being said, let's take it on down to the 4-hour time frame. You also see the sell-off last week pushing under the blue zone. We've also now seen single candle bodies. We've seen several candle bodies underneath this blue zone. Now, again, let's not get carried away. We know that the market can change its mind in a moment's notice without too much hesitation, so we need to be aware of that and know that it could turn around and go back up. But because the last time, if you just take a look right here, we did see the false move underneath the blue zone on the 4-hour, and it turned right back around and went up. So our clue, our heaviest clue, is the fact that right now we're holding underneath the blue zone on the daily time frame, back to the 4-hour time frame. So we look for opportunities underneath there. Risk, again, associated with this is that we don't want it to get above the blue zone. So stop losses would be above the blue zone if you decide to take the short. We target the yellow shaded area. Fairly low risk and a pretty decent reward for the USCAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.